Talk to us about some of the new sort of plans that you've laid out today in that investment day, really talking about targeting, different cash levels, the 5 to 6 minimum as $1 billion. How are you thinking about the path to get there with higher cash levels?
Well, thank you. Thank you very much. It's a pleasure to be here with you. Well, we're very comfortable with the debt level that we reached. We've been deleveraging the company over the last 5 to 6 years. So we released our new business plan with very resilient projects and very strong portfolio. So we're comfortable with Brent prices of $35 per barrel. So that's how we prepare ourselves. We're increasing our production and including 15 new units, 15 new FPSOs in the Brazilian pre-salt layer over the next 5 years. So it's a very solid plan, and we believe we can deliver it very strongly.
Do you think that there'll be market support, and I mean oil market support, for the production plans that you have in place, or at least the ones that you announced today?
Well, that's a very good question. If we look at the prior business plan, we were expecting $45 per barrel for 2021, and we've seen much more positive prices. But again, the most important part of it for us is to be ready for very volatile scenarios and for very lower Brent prices. So we prepare our projects to be resilient to $35 Brent prices. So we believe we can add a lot of value when we see price upsides like the one we've seen over 2021.
So what's your base assumption for oil price right now?
Our base assumption for 2022 is $72 as an average, but for the long run and the end part of the business plan is $55 per barrel in the long term. So we work with a base case of 55 and a resilient scenario is 35.
Some lawmakers and the administration itself have raised issues about Petrobras adjusting fuel prices, perhaps trying to change pricing policy. Will you have to cut prices in order to help out the government with inflation?
Now, the company is independent, and of course we have state participation in the company, but the Brazilian market is getting more and more open and more competitive. We're selling 50% of our refining capacity and attracting new players to the Brazilian market, and this is moving very fast. So to have a very strong and solid market in Brazil, we do have to have market prices, and that's how the company has been behaving. Of course, we've seen a lot of volatility in oil prices recently. But again, the Brazilian market is getting more and more competitive over time, and we think that's very positive both for the company and for the country.